Hey guys, Nick here, back with another video, and in today's video we're going to talk about how tuition credits work in Canada. So tuition credits are an example of non-refundable tax credits in Canada, which means it can reduce your tax bill to zero, but you won't get any refunds from the tax credits that you have. The tuition credits that you do get, if you have more credits than you have taxes owing, those credits can be carried forward to future years. So come tax season, you'll receive a tax slip. In Canada, it's a T2202, otherwise known as a T2202A. And that has on it information from your post-secondary institution regarding how long you were in school and how much in tuition you paid. If you go to school outside of Canada, you'll likely get a T11. Most common T11 is the T11A. And once we have those tax slips, we can now look at how to apply that on our tax return. So if you have a T2202 form, there's going to be information on it such as the name of the institution in which you went to school for, your name, your student number, what program you were in, and then the important stuff is in boxes 22 to 26. It breaks down how many months you were in school as a part-time student and how many months you were in school as a full-time student, and then the eligible tuition fees in which you paid to go to that school. Once you have your tuition fees, you're going to go to your Schedule 11 on the Canadian tax return and file your tuition credits for that amount. You'll see there's going to be a provincial and a federal, but in this case we're going to look just at federal, and that's Schedule 11. So we're going to input in our tuition credits for the year, and then we're going to go up to Schedule 1, and that's the breakdown of the calculation of your taxes. So if you look at Schedule 1, it's now called Step 5 in 2019, and you're going to see there's a section, and it's line 22, where you input the number for your tuition credits. So as I said before, tuition credits are an example of non-refundable tax credits, which means it can reduce your tax balance to $0. All non-refundable tax credits are calculated by a percentage, and that tax credit rate right now is 15%. So let's say, for example, if you had $20,000 in tax credits, you would times that by 15%. That's the equivalent of $3,000 in tax savings. Once you add up your total non-refundable tax credits for the year, you're going to have your tuition credits and most likely your basic personal amount. If the total times 15% is greater than the amount of tax that you owe, you'll be able to carry forward the proper amount of tuition credits to a further year. So that way, you don't waste any tuition credits. You'll bring your balance down to zero, and the remainders are carried forward. You'll know how many you have to carry forward on your latest notice of assessment. There'll be a section at the bottom that will give you your carry forward amount information, and it'll tell you how much in dollars you have for federal and provincial carry forward amounts. So while you're in school, most likely you're not earning a whole lot of employment income. So in most cases, we see a lot of tuition credits get carried forward until you start working full time. This is when you see those first 1 or 2 years of your full-time employment that you begin to see a lot of refunds, and a lot of big refunds at that, because you're using all of your tuition credits that you've earned over your 4 years of post-secondary study. So let's say, for example, your first year out of university, you have your full-time job and you made $40,000 at the year. You'll still find yourself in the smallest tax bracket, which is 15%, which means your taxes owing on the federal level would be $6,000, 15% times 40,000. Now let's say you had, we'll say $40,000 worth of tuition credits saved up, plus other non-refundable credits such as the basic personal amount, CPP contributions, employment insurance, and a credit for being employed. Those are all common credits that we all get as employed individuals in Canada on a federal level. So let's take a look. We'll run that through right now. The basic personal amount is $12,069. We'll say our CPP contributions were $2,910.60. Our employment insurance, we reached the maximum of $860.22. Our Canadian employment amount is $1,222. And then our tuition credits, which we're going to say is $40,000. So I'm going to add that together. And that gives me a total credit amount of $57,061.82. We're going to times that by 15. And we have $8,559 worth of tax credits. So from the federal perspective, that's going to bring our tax balance down to zero because our original federal tax balance was $6,000. So what happens is, from a tax perspective, any tax in which you paid during the year is going to be refunded to you. So often when you see these tax balances of $5,000 or more when you're filing your return those first couple years out of school, it's not the government giving you money, it's money that you're getting back from the government that you already paid. So if you have a job and your employer is regularly withholding taxes from your paycheck on a monthly basis or a weekly basis or however often you get paid, you're essentially just getting that money back when you file your return and claim these credits. So if you like getting those big refunds back, that's great, but don't think of it as the government giving you money. That's money that you've been paying the government that the CRA is realizing that you didn't need to pay in the first place. So what you can do if you're in this situation where you have a lot of tuition credits built up is you can file what's called a TD1 and claim those tuition credits that you have on that form. Your employer will then be able to calculate how much tax should be withheld from your paycheck on a monthly basis based on those credits. So that way at the end of the year, when you are claiming your credits, you won't get as big of a refund back because you'll actually keep more on a regular basis from your paycheck. So you won't be withholding as much tax throughout the year. So instead of getting your $5,000 refund or however much you paid in taxes from your refund, you'll actually get that $6,000 or $5,000 refund over the course of the entire year because you're keeping it in your pocket. The other thing about tuition tax credits is that they are transferable to some sort of dependent. Most commonly would be your mom or dad. So on your T2202 form, there is an option at the bottom that you can complete, and you would acknowledge the fact that you're taking your tuition credits and transferring them to a parent. So that way your parent would actually be able to use the tax credits that you've accumulated on their return. The one thing about that is that parents are limited to a certain amount of tax credits from tuition per year, but that is an option in which if you do find yourself having your post-secondary education funded by mom or dad, they can be the beneficiaries of that tax credit instead of you. So that's how tuition credits work in Canada. I hope you found value out of this video. If you did, please give it a thumbs up and please consider subscribing. If you have any questions, please feel free to reach out. And if there's any tax topics that you'd like me to cover in future videos, please leave suggestions in the comments below and I'll consider making a video regarding that topic. But I thought tuition was something that affected a lot of you guys that watch the channel. So I just wanted to shine some more light on the topic so you're a little bit more knowledgeable about how your taxes work. But that's it for me. I'm Nick from Nick's Taxes, and until next time, happy taxing.